If you're a homeowner in foreclosure and you have already decided to let the bank take your house, there may be one thing that you're not considering. And it's not your mortgage, it's not the foreclosure process, and it's not even your credit score. It's your home's equity. Many homeowners feel that since foreclosure began, all of the equity in the property belongs to the lender. This is just not correct. And before letting the lender take your house, you really must know what you may be walking away from. That you may not be just walking away from the house. You may be walking away from a check. And the larger the equity, the larger that check could potentially be for you. I would like to give you an example to make this real. As we speak today, the median sale price of a house on Staten Island right now is around $702,000. It was approximately $620,000 just 2 years ago. That's an increase of more than $80,000 in 2 years. Think about that for a moment. There are numerous homeowners who are experiencing foreclosure and they have not looked at the current values of their house in years. They are so concerned with missed mortgage payments. They're worried about receiving foreclosure notices, and they are so stressed. What they don't realize, though, is how much their house may be worth today. Because of this reason, many homeowners get themselves into difficulty simply due to their lack of knowledge regarding what their house may be worth today. Let's say that you have been attempting to pay your mortgage for several months now, or you have been denied any type of assistance, or maybe you have already decided that you want to end your battle against foreclosure, and you finally come to the realization that the bank can have your house or take your house. Honestly, I can fully comprehend that feeling. By the time most homeowners experience a pre-foreclosure, they are so extremely fatigued. They are tired of the constant phone calls. They are sick of receiving notices of foreclosure. They are tired of being unsure as to how they will make their next mortgage payment. However, as I mentioned previously, the mistake many of those homeowners make is focusing so intensely on their monthly mortgage payment that they end up losing track of the equity in their home. And these are two separate things. One of the greatest misunderstandings that I encounter relates to homeowners assuming that just because they have missed several mortgage payments, their house no longer has any equity left in it. And it's important to know that the bank is owed a debt. But that does not mean that the bank automatically owns all of the value in your house. Let's look at a basic example. For instance, if your property is valued at $700,000 and you owe $450,000 on the mortgage, even if you take into consideration costs that are associated with selling the property and various other related expenses, there's likely substantial equity still remaining in your property. And that equity does not belong to the bank. It belongs to you. In this example, we're talking about approximately $250,000 before selling expenses. This is real money, guys. And that is exactly why it can be dangerous to just assume that there's nothing worth protecting here. You may be looking at a house you can no longer afford, but the equity inside that house, that may still be one of the largest assets that you currently own. Does this mean that every homeowner has equity? No, of course not. Some do not possess equity in their properties at all. Some might be upside down. This is why the biggest concern is that you do not know unless you take a close look at the actual numbers. And unfortunately, many homeowners fail to do this task. Alternatively, many homeowners mistakenly believe that they lost their property along with its equity. And instead of taking proactive measures like reviewing their situation and finding out if they still have equity in their property, these homeowners choose to wait for the foreclosure process to just go through. Not to mention that in addition to the current debt, the amount owing on their house increases continuously during this period. Interest continues to occur on their debt. debt. Legal costs associated with the foreclosure process continues to add up. Costs happening during the foreclosure process continues to grow. Even taxes also continue to accumulate. Insurance premiums, they may also continue to accumulate. The foreclosure process does not suspend the accumulation of interest on a borrower's debt. That's important to understand. And additionally, as long as foreclosure proceedings continue, the borrower's equity continues to decrease. Consider your equity as a container full of water. Every month that the foreclosure proceedings continue adds another hole to the bottom of that container. And while the water does not evaporate instantly, gradually additional water seeps through the holes. That is why delay can lead to costly consequences. And this is because the lender is proceeding with the foreclosure and your equity continues to decline by the time you finally do decide to act. With this thought in mind, many homeowners face a common question at this point. Will I be able to save my house? This is certainly understandable. But sometimes a better question could be, will I be able to preserve my equity? Because as I mentioned earlier, there are situations where continuing ownership of the home does not offer any financial benefits. If your hardship is irreversible, if payments are unsustainable, or if your situation has undergone changes, even if you cannot save your home, there may be an opportunity to preserve the equity that's within. And this is an area worth investigating before reaching a final determination. Am I suggesting everyone should rush to sell their property in foreclosure? Absolutely not. Each individual circumstance differs significantly. Some homeowners qualify for a loan modification. Other homeowners qualify for a repayment plan. Some homeowners may have viable legal defense. Others may be eligible for alternative programs. The objective of this video was not to intend to dictate your course of action, but instead ensure that you obtain information before giving it all up. So when and if you say, I made a decision to surrender my property, you are basing your decision on facts. Because assumptions can very much cost you money, lots of money. If you are in pre-foreclosure in New York or in New Jersey, and if you're contemplating the idea to surrendering your home to the bank, do not realize that decision until you are aware of the numbers involved. Determine what your property is currently worth in today's market. Identify what you owe on your mortgage and determine if there's any equity in your property for you. Because there's a big difference between abandoning a home and abandoning a check. Do not ignore this critical difference. We can assist you in determining your options and identifying your best course of action by clicking on the link provided below and schedule an appointment for a complimentary consultation. We will help you assess your specific situation, we'll provide an analysis of your numbers, and assist you in identifying which course of action will enable you to achieve your desired outcome based on your unique set of circumstances. And I'm rooting for your successful outcome.